Hi there, Bill Rogers, Lauren Hall here, coming to you with our weekly wrap with a little bit of a fresh change in winter here on the Gold Coast. After much popular demand, the 𝘄𝗏𝗽, there's only one thing better than a 𝘄𝗏𝗽, and that's a fresh knit.
Stop it.
As voted by me. But more importantly, let's talk about what's trending in lending this week. So a couple of things thought we touch base on: change in policy, some interesting stuff coming out with first home loan deposit scheme, and access to some pre-approvals. So talk about policy first.
Yes, absolutely. So in the last few weeks, we've had a chat around some of the bank policy changes in regard to COVID. So the policies prior to COVID and then the additional layer that came in during COVID, and that it would seen a number of the banks start to revert back to the pre-COVID policy. Really interesting, this week we had a major come out and say that the COVID policy, so the additional layer of verification specific to the self-employed side of things, was now becoming permanent. So a little bit different to what some of the other guys have said. So, that's meaning things like during COVID, we were needing to get BAS to show how the business was trading right now, comparing that to tax returns and those kind of things, or interim P&Ls. A lot of the banks are now starting to get a bit more relaxed about that. However, in this case, that is now business as usual. So they are looking to see what is the business doing right now, as opposed to looking just at your previous tax returns or previous financials. So that's interesting. Really just highlighted, I suppose, the self-employed space. The banks have always been very different in how they lend money and what they look at and the income they'll use and those kind of things, but just really highlights how different the banks are in the way they're lending money. This bank in particular previously was probably known to be quite favourable around the self-employed space. Actually had some really great policies in that, and now we're seeing, across the board, they're probably now one of the more conservative. So they do shift their appetite and what they're willing to do and not willing to do depending on what's happening. So just again, that's why your trusted A-team of brokers are so valuable, because we know this stuff and we know where we need to go to get you guys the very best outcome.
Frustrating for a self-employed client to go through that and have banked somewhere for 10 years, 15 years, to do all the right things, to only turn up and be told that suddenly you don't qualify on the basis of X. So interesting with that bank, as you said, they used to be one of the more flexible, because we don't name banks, but who could that be? One of the four majors. But you would have a set of tax returns that could be, say, 18 months old from a previous. So we look at where we are now for 2021, still accepting some of 19s, some 20s. You didn't need 2021s. We're now, fast forward that bank, and they would isolate. I could give it away here if someone knows.
Careful.
They would isolate 1 year's worth of tax returns, so they weren't one of the banks that needed 2 years to average, or the lower of the two, or the 20% variance, or any of the fun stuff we go through with clients. They were traditionally just the 1 year standalone, which was a huge point of difference, right? When now,
for a business that's growing, it's fantastic.
To average, especially if the year was growing and this year was bigger, they'd accept this year over averaging the two, or looking at the previous. Where they're now obviously one of, I was going to say tougher, like that you said, more conservative, to be fair, appetite for risk. But massive change, huge backflip.
Huge.
And we've seen a couple of other banks go, well, no, we've reversed that policy around the COVID stuff we need, and we're happy to just take 2020s, or some people even relying more so on accountants' letters, which has been really interesting, the shift.
We've even seen, sorry to interrupt you do it to me all the time, to be fair, but in this case, there's even a few that are saying, look, we'll actually overlook 2020 because we know for some business it was really hard. We'll actually work on your 2019s, and if you can show your business is doing okay, we'll actually work on that. So that's really favourable for some certain types of industries. So very different.
And again, backing it up with something like an accountant's letter, which didn't carry a lot of weight traditionally in your sort of more of your mainstream residential consumer lending. A bit different for business, but so it's a really and timely this time of year as well. Again,
absolutely
going down that line. How do we prepare 2021s? They're going to be due soon. For some, traditionally some clients wouldn't do those till April, May next year, and they wouldn't be due by a bank. But what can we use to your advantage as your business has maybe shaped or grown during that COVID period in particular? Very interesting. But if you are self-employed, we are the guys to call, the people to call.
Correct. The gals and the guys.
The peeps. So definitely look at that as an option. Definitely broker in general, I guess, over a bank, because those policies are shifting. The 𝘄𝗲𝗇𝗆, the first home loan deposit scheme, is back, which is exciting. For the good news, 10,000 spots for established and 10,000 for new. That's a big swing back to the first round of allocations that we got. It had traditionally just been for brand new, sort of new builds, where now they've brought 10,000 out for established, and they've also raised, the exciting part, they've raised the limit from the purchase price. So we've seen that change in areas as well, because there was a lot of criteria around income, the property purchase price, all of those things. So the purchase price has been raised, I think, to be fair, to be a bit more in line with the market in some of those areas. We do have some banks now taking pre-approvals as well, which is exciting for those, because a lot
technically they don't come out till the 1st of July, you see, so they're starting to say, okay, we'll get you on the list.
Not all banks are doing that though. That's why you call your broker. And the income piece you mentioned?
So just remember, because there is income caps, which are government requirements, not bank requirements, government requirements around the first home loan deposit scheme. Before you'll be able to go unconditional, if you are nabbing a spot from the 1st of July, you will need your 2021 notice of assessment. Okay, so if you're a first-time buyer and you're wanting to jump on that scheme, remember 10,000 for each sounds like a lot, but there's 150 to 200,000 first-home buyers every year, and they go like hotcakes. You need to be getting your tax return organised and lodged ASAP, because you must have that notice of assessment to show that you meet the income criteria for the government before you'll be able to go unconditional.
Financial.
Correct.
Yeah, it's just timing. So,
but
so that's our top tips for this week
for
and
the
everything
week
that's trending in lending. As always, we look forward to seeing you next week. Any questions in the meantime, we're only a phone call away. Enjoy the weekend.
Bye.
Bye.